Mark Cudmore. Mark, we have been preoccupied by software stocks, the supposed losers from the AI trade. Today we get to preoccupy once more with data. There was retail sales yesterday, came in a little weaker than expected. How are you setting things up for the jobs report later on today?
Yeah, I think we've got the jobs report today and we've got CPI later on this week. On the back of retail sales, I'm slightly worried, we've talked about this a bit, that I think that the data is going to have a little bit of a stagflationary whiff about it. As I said, I'm generally pretty bullish on global growth this year. And so I think this phase passes, but I think that's the dynamic we get this week between retail sales, the jobs report today and CPI Friday. So in terms of markets' reaction to that, maybe it's a little bit more into next week. But I think that stagflationary idea is going to worry people a little bit. See ongoing steepness in the yield curve as a result. Something we've talked about this week. I've been shocked by the strength in long end bonds. I'm on the back foot there, but I don't see that kind of sustaining. Maybe in the short term, long end bonds do okay if we get very weak data today. But I think that the secondary move, once we get CPI and into next week, will be steepness again. And because of that, I still think the dollar probably stays under pressure. And I reckon the dynamic is not great for stocks and risk assets.
OK, yeah, to your point, Mark, good morning. The dollar down, the Bloomberg dollar index at least down 0.2%. We're seeing a rally for the Japanese yen, up 0.7%. Is this a short squeeze for the yen, Mark? What do you make of the trading action around the FX space, particularly in Japan? Yeah,
what's happened in the yen is really remarkable because it's quite contrary to what most people expected. It's one of those things where a short squeeze starts developing its own narrative. I'm seeing increasing reports come out from the sell side, kind of explaining this as the big material shift in the yen. Now, we know that always for the last 6 years, the macro community is dying to get on the long yen trade. They've called 20 of the last 0 big turns in the yen. This could be another one. What I've found in these dynamics is they can last for some period of time. So even though the yen may go back into it's been in a depreciation trend for the last 6 years, it can get rallies that last for a couple of months. And it kind of feels like that might be the dynamic here where people are excited, partially because people are expressing it via dollar yen, and dollar has its own bearish scenarios. Personally, I think that the dollar weakness is the much longer term sustainable one, but I think people will see more dollar yen downside in the short term.
Mark, how do you feel about the broader price action?
I'm hating it. I'm feeling really grumpy at the moment, Guy. I get grumpy when I don't feel I understand what's going on. It goes back to being when you're trading and you're making money, you're calling things right, and you start calling more things right because you start seeing it clearly. When you lose money, you get defensive, you start making poor decisions, you get cortisol in your brain. It's the same in the seat now. You feel responsible for the kind of the calls you make. At the moment, things aren't making sense to me, and I find when things aren't making sense at the moment, and it's not because I'm losing money because I don't have a P&L anymore, it feels that that's when things are feeling more dodgy and you get more dislocations. Now, those dislocations can go in either direction, but given the backdrop of the data expectations we get and the rotation we're seeing in tech stocks, I am worried that equities have a big move downside in the next couple of weeks.